Welcome to The Explainer. Today we're diving into something I like to call the Phoenix Pivot. We're talking about one of the absolute most stunning corporate turnarounds in recent history. Because, look, we are moving way past the meme stock mania here. We're going to examine exactly how the bankrupt retailer Bed Bath & Beyond is structurally reinventing itself from the ground up to become something completely different. I mean, just think about that for a second. How does a bankrupt retail chain transform into an AI and blockchain powerhouse? Going from selling new physical bath towels to literally tokenizing real estate on the blockchain? It's a massive, almost unbelievable leap. So to grasp how a dead retail chain becomes an AI powerhouse with this overarching everything home strategy, we kind of have to start by looking at the monumental collapse that forced this pivot in the first place.
You know, to understand the future, we always have to look at the past. And the legacy company's past? Well, it involves spending a staggering $11.8 billion, yes, billion with a B, buying back its own stock prior to bankruptcy, instead of, modernizing their supply chain, or building a robust e-commerce platform to actually fight off their fierce online rivals, or even just keeping cash on hand. Billions were effectively thrown into a burn pit as the core business just completely deteriorated.
And that mismanagement just kept snowballing until it hit a total collapse. You probably remember the whole 2021 meme stock craze, right? It was driven by retail investor nostalgia and some absolutely wild volatility. But then in August 2022, investor Ryan Cohen abruptly exits his 12% stake, which basically crushed the stock's valuation. So desperate for a lifeline after defaulting on their JP Morgan loans, the company engaged in these highly complex financing deals, but ultimately they just ran out of time. They filed for Chapter 11 bankruptcy in April of 2023.
75%. That staggering number represents how much the stock price plummeted just from that controversial Hudson Bay financing deal. They were trying to raise $1 billion through a super complex share sale in a desperate bid to survive. The result? Shareholders were massively diluted. It was just a textbook case of a distressed company running entirely out of options. Okay, but here's where the story shifts entirely. We go from a depressing retail postmortem to this crazy tech ecosystem rebirth. The brand is resurrected from bankruptcy with a wildly ambitious new mission. They want to be the everything home company. They no longer just want to sell you the products inside your home, right? They want to own and service the entire life cycle of the home itself.
So what does that actually look like? Well, they aren't just selling you a blender or a bath mat anymore. Their strategy now spans these integrated pillars that move way beyond traditional commerce. We're talking traditional furniture and decor, sure, but also high-tech appliances. They want to finance your mortgage, build prefab modular homes to address affordable housing, insure your property, and even run your home maintenance programs. It's a complete end-to-end ecosystem.
And to execute this massive vision, they've built this incredibly smart multi-brand flywheel. Through strategic acquisitions and partnerships, they brought together legacy names that you know, Overstock, buybuy, Kirkland's Home. And to really cement that platform, they recently signed an agreement for a mid-2026 acquisition of Fathom, which is wild when you think about it. It means the exact same company that once sold you a shower curtain now wants to be your real estate agent and your mortgage broker. Now, underneath all these familiar, nostalgic retail banners is the real secret sauce. It's a highly sophisticated, cutting-edge technology infrastructure. So those physical stores, they're really just high-value entry points now, designed to gather rich data and pull you, the consumer, into their digital ecosystem, an ecosystem that is entirely powered by artificial intelligence and blockchain technology.
Think of Beyond Home OS as the brain of this whole operation. It acts like a central nervous system connecting everything together. It's an AI-powered operating system designed to seamlessly link up your mortgage data, your property insurance, your furniture purchases, and your home maintenance schedules, all sitting in one incredibly secure, unified platform.
So the contrast here is just stark. Remember those gigantic, iconic 20% off paper coupons that used to completely clutter up our junk drawers? Well, they've traded those in for what they call a unified home data fabric. Instead of just hoping you walk into a store, their AI analyzes geographic trends, home attributes, and behavioral data to actually predict what you need before you even know you need it. It's called agentic commerce, where the system essentially does the shopping on your behalf.
And this leads to a huge paradigm shift, valuing the household over the individual. By tracking real-time movement patterns, local housing supply, and affordability trends, the AI optimizes pricing and marketing. But here's the absolute key differentiator. They are shifting focus from the lifetime value of an individual consumer to the lifetime value of the entire household asset.
They are literally monetizing the property itself, making money off the home's maintenance, its insurance, its eventual resale, not just the random objects sitting inside it. Now, you might be wondering, how do you secure all that incredibly sensitive property data? Enter their blockchain pillar. I mean, when you're dealing with mortgages, title processing, and property insurance, you absolutely need bulletproof security and verifiable data. That is exactly why they now hold a blockchain asset portfolio. They're utilizing platforms like tZERO, which has some very specific regulatory licenses, and GrainChain to bring unprecedented security, transparency, and speed to these really heavy financial transactions. Let's look at how this tech plays out in the real world, because it's fascinating. They are using blockchain to literally democratize store ownership. By using the tZERO blockchain platform to tokenize the equity of local Bed Bath & Beyond franchise locations, regular community members, retail investors, can actually buy fractional shares of their local store. It totally transforms how retail capital is raised. And hey, the proof that this massive pivot is actually gaining traction, it's right there in the numbers. Even with the complete structural teardown and the integration of these highly complex tech platforms, the newly structured company generated a solid $1 billion in trailing 12-month revenue. That's a massive signal that this everything home flywheel is already spinning. Plus, unlike the old regime that tried to mask its fundamental rot with high revenue but terrible profitability, this tech-first iteration operates completely differently. They care about actual profit margins over flashy headline growth. They are aggressively prioritizing the higher margin recurring revenue that comes directly from those digital services, the insurance products, and those blockchain-enabled financial instruments. Which leaves us with a really fascinating thought to close on. This explainer shows us that with the right data fabric, proper AI integration, and a solid blockchain infrastructure, a brand associated with the slow decline of the shopping mall can actually become a pioneer in real estate tech. It makes you wonder, right? If Bed Bath & Beyond can pull off this kind of technological metamorphosis, what other legacy brands are out there right now just waiting for the right visionary to unlock their untapped potential?